Hey traders, welcome to Charts and Coffee. We are going to be kicking off this morning, of course, with any questions that you might have. Feel free to type them in. Happy Thursday, everybody. All right, so big shout out and thank you to those of you that were there for the webinar yesterday. We walked through trade examples, we walked through different ways to understand this current environment, and we're going to kick off today's Charts and Coffee with a look at why this is not a bearish market, because there's a lot of chatter out there about what's happening right now. And unfortunately for a lot of traders, if things aren't going straight up, right? Oh, clearly this must be a bearish environment. So let's put some data behind it. Let's put a process behind it. And I'll show you why I'm not a bear. Now, for those of you in the mastery know, it takes a lot for me to be bearish. And by the way, gang, it should for you too. Imagine that you're looking at something, whatever the thing is, the stock, the ETF, the sector, the index. If you step back and look at darn near anything that's attached to the broader averages, things that tend to move with the NASDAQ, S&P, and Dow, you step back and you look over the course of years, there's a tendency for stocks to move higher. You look at a logarithmic chart instead of a price chart, you look at the logarithmic chart. You also notice that's the inclination of darn near everything. So to be bearish in very small doses is more than enough, right? Too much of that bearish dose is going to poison you. And a lot of traders and analysts especially, they're just poisoned by the bearishness that they've just one time let into their life and just never stopped dosing with. So to fight that off, right, because you're going to be bombarded with it, to fight that off, I'm going to show you what normalized performance over the last 1 month looks like. Now, the first thing to look at, and I teach this to folks in the mastery. Let me grab my drawing tools here. I can really highlight this here for you. I teach this in the mastery. So if you're getting pummeled by bearish nonsense and you're realizing this is not making me money, if anything, there's an opportunity cost, and or worse, you're actually short, and a lot of times these markets rip higher, right? How do you understand a bigger picture? Now, mind you, this is a daily time frame assessment. This is a longer term type time frame assessment, right? Not a day trading one that changes every day, but 1 month look back. And then this is the zero line. There are only two sectors that are below the zero line. You can see here technology and semiconductors. So really simple. Unless you're finding a relative outperformer, an individual stock in these two sectors, don't be too bullish there, right? Don't be too bullish there. But look at all of these names that are above this 0% line. It means over the last month, they're positive as opposed to negative. Look at this, gang. This is basic materials, regional banks, healthcare, financials, metals and mining, communications, agribusiness, etc. Look at all this, all the way down to oil and gas services. These are actually, no, to staples. These are all positive. Does anyone think that when this many of the important high concentration weighted sectors in the indices, as well as some others, right? Obviously, MU is not high concentration weighted. Metals and mining really isn't. Utilities and staples are defensive. But when this many sectors are above the zero line over the past month, is this a bearish environment? Right? So this is how you can keep steady and know your North Star and not get sort of distracted or fooled or bamboozled into a lot of the terrible analysis out there right now. But let's talk about what we are dealing with. Now, everything I'm going to teach you is always going to be based on data. All the trades that we take are going to be based on trends. And again, that's based on data, whether that be price data, macroeconomic data, volume volatility, what have you. What we're in right now, why does this market feel so different in Q1? Why does this S&P feel so different in Q1 of 2025 than it did in 2024? Who's noticed here, wow, this is a very different environment? Well, this goes back to things that I studied as a teenager. One of the most influential traders in history, for me personally, was Charles Dow. Charles Dow basically taught us the market can do one of two things: move sideways in a narrow range, move sideways in a choppy range, right? Move up, move down. That's it. And right now, what we have is the choppy variety of moving sideways. This often comes after a prolonged rally. So not always, but if we're looking at generalizations that are usually pretty accurate, not always going to be the case. I have to sneeze. Excuse me. All right. So if we're looking at this chop, usually this choppy wide range comes after prolonged uptrends. After prolonged downtrends, you can see choppy wide ranges. You can also see narrow ranges. Somebody asked me about whether or not, what does NVIDIA look like right now? Is NVIDIA starting to show the signs of after a move lower, it's settling down? We can take a look at that as well. All right, so if I'm looking at, say, the S&P, this choppy market is going to be a very different strategy than when we were mostly green trends and green momentum. So if you don't have a way to differentiate between, right in here, taking advantage of basically buy the dip, right? Buy the dip, taking advantage of trend following strategies. Now, this is really more about oversold and overbought, but it all starts with something as simple as a traffic light. Can you imagine if traffic lights were complicated devices? Well, if this is happening and that's happening, if the yellow's kind of easing into the green, or no, if the red's, can you imagine what traffic would look like? What intersections would look like? They'd be disasters. They'd be demolition derbies. And that's what a lot of traders' assessment of trends look like. It's a demolition derby in their account because it's just not a clear red light, yellow light, green light type of clarity. That's where trend analysis, it can't be, well, the shorter moving average is kind of crossing this and the longer moving average is doing, no, you're going to get a wreck in the intersection, right? So if you notice, we clearly stopped trending in mid-December. And that's, well, thanks to Jerome Powell. So we had that December 18 shift, verbal shift in the monetary policy. We've been chopping ever since. The next thing I need is a way to identify what defines the chop. Everybody with me so far? What defines the chop? Right? So here's my resistance, here's my support. So now I've used an automated tool to define that. And now we just wait for price action to move to one end or the other. Now I'm still bullish. So the closer we move down to this area, I'm looking for calls, right? And this is where I would take initial profit. This would be really my first target or my T1, right? This would be my first target or T1. And this is the kind of clarity you have when you start off with the first question. Are we in a choppy market or are we in a trending market? Hi, puppy, you want to go back outside? Today was bring your puppy to work day. They can't see you. I'd love for them to see your beautiful face. Hang on, so you can get the puppy in the picture here. There she is. A lot of folks ask, hey, where's the pup? There she is. All right. You're going to have to wait till the show's over. 10 more minutes, okay? 10 more minutes. She may or may not wait. So that's the kind of clarity that we need. Now, let's apply that to one of my favorite sectors right now. If you're not looking at it, got to look at it, financials. All right. So if I'm looking at financials, you'll see that we've been in trending environments. We got choppy in early December, got it turned into a downtrend for a very brief period of time. So don't buy calls in this area. The probability of a bounce is really low. Okay. Then we started getting some green momentum. Look at the upper row of this tool at the bottom. We call the multi-structure. What's the structure? Are we bullish structure, bearish structure, choppy? If we're choppy, is it bullish chop? Is it bearish chop? Right? So here we have some bullish chop coming in. We have the green candles coming in. And now, guess what I'm going to do? I'm going to start to buy. Here comes the uptrend. There's so many shifts that we need real time. I mean, candle by candle assessment to have the confidence to say, oh, this is bullish, but it's bullish chop. Okay, this is bearish. Now it's a downtrend. Okay, now the downtrend is broken. Literally, we can do this day by day. That's the level of accuracy. So ultimately, right? Ultimately, the whole idea behind what XLF is doing right now is it's in an uptrend. It's bullish, and that's going to be bullish for things like JP Morgan. That's going to be bullish for things like Bank of America and Wells Fargo. So if these names are not on the list, got to put them on the list. What we trade is more important than how we trade it. Let's always prioritize trends. One of the things that people ask me is, Rog, we've been getting emails, we know you did a webinar, but we keep reading that you've been profitable for 35 years. Yeah. I've never had a year where I've been negative ever. That's not to say I haven't had negative months. January was a negative month for me. It's a single digit negative month. February is off to a great start. Last April was a negative month. I'm usually going to have at least one or two negative months, right? Folks who don't talk about losses have a lot of them. Folks who are willing to talk about losses, no, it's just a part of the game. If we're talking about things like win rates, we've got to talk about losses. If we don't manage the tough times well, we can do really very tough to repair, if not irreparable damage to our account. So in a month like January, which was tough, no question about it, my job was to make sure that when I had a loser, it didn't obliterate my account. What's an obliterating of your account? What's a completely unacceptable amount of loss in an account? Frankly, to me, anything above 5, and I see constantly traders risk 10% or more of their account on a single trade. That's the surest way to A, make sure you don't have account growth, and B, eventually blow up your account. So there are little things with the numbers that we need to be aware of. The best way to grow an account is find the trends, period. Are there always going to be trends? Yeah. There might not be as many, right, as say Q1 of last year to Q1 of this year, but money has to go somewhere. Money is like water. It hits a wall, it's going to go left, it's going to go right, it's going to go up, right? It's going to go somewhere. So our job, 80% of our job is figuring out that flow. And if one part of the market, one sector, one stock, popular stock, is losing favor, believe me, something else is. Money's got to go somewhere. There's an entire industry dedicated to deploying capital and looking for returns. You don't get returns putting the money under the mattress, right? Okay, so look at something like NVIDIA. Is this something where we would be looking for a bottoming pattern? I'm going to talk. I brought up Charles Dow already. How many of you are interested in something like an NVIDIA? Right? I see Oracle there. We'll take a look at that as well. If you're interested in something like NVIDIA, right? Please don't get caught up in, we had a big up day, right? A lot of folks probably thought that on the 28th, maybe even on the 30th, and I'm sure all sorts of folks thought that on the 5th. And this reminds me of questions I was getting once upon a time around Apple. Like, Rog, we're up and away. No, we're not. Look at the color of the candles. Look at the structure, right? So it's starting to make hopefully a little bit more sense. NVIDIA, I pointed out, was one of the weakest. Technology, XLK, and semiconductors were two of the weakest sectors. NVIDIA is weighted heavily in both. So wait a minute. By looking at NVIDIA, what am I trying to do here? What is it that traders are doing? I don't want anything to do with NVIDIA. Maybe a day trade, right? But if I'm looking at a stock heavily weighted in both of those, what's another stock heavily weighted, at least in XLK? Apple. What's another stock? Microsoft. Right? Microsoft just, I think, upped the cost of $365. These are not the kind of stocks we want to be focusing on, right? There's a big difference between looking at things that are moving higher, like the financials I was showing you, or heck, even gold, and try to pick a bottom in things that are already heavy. What I'm showing you is a little bit of alignment, right? This is a little bit of alignment. A lot of traders get into trouble because they're not looking at where their stock is weighted. These stocks are going to have to work really, really hard, right? So this is, please, gang, this year can be profitable. January was tough. I'm the first one to tell you January was tough. I ended up closing down January down 6.7%, right? Now, December was pretty tough. I was more or less flat, slightly down. November was a monster month. I think it was up about 20% on some of the trades in November alone. October, November were great. February is starting off pretty darn good. We've got some clarity around sectors to avoid. We've got some clarity around sectors and stocks and indices that are starting to shape up. Right now, the clarity is not in the indices. We are in that sideways chop. Charles Dow would call this distribution, right? This is oftentimes the way uptrends organize after a sustained run, like I said. But giving it a name is not enough. I can give you the precise day that we broke the downtrend, and I can give you the precise day that we went into distribution. You ready? The downtrend was broken exactly on 12/18 with Powell. The distribution was confirmed at the end of 12/19, December 19, and boom, we've been in that ever since. Sometimes it's bullish, sometimes it's bearish, but it's all chop. So imagine if you knew back then, oh, this isn't a trending market anymore. All right. Now, what about, let's go back to those two examples I mentioned earlier, Apple and NVIDIA. Okay. When did Apple lose its mojo? It wobbled between January 2 and January 8. So it was not as bullish. It wobbled. This isn't a downtrend. First red candle, the 10th of January. That was the first day. He said, wait a minute. As soon as I see that red, I want to flip the script. No more buy the dip. Who's heard of sell the rip? That's a sell the rip environment, and it has been since precisely the 10th. Okay. Or you can do nothing, but oh my gosh, please don't be buying calls after the 10th, on or after the 10th. And you can see that's worked pretty darn good. Don't get ahead of yourself. Even with these rips higher, just suckering traders to the long side in, only to boom, drop the boom on them. All right, what about NVIDIA? When did this shift? NVIDIA has been a mess for a really long time. It was great, right? But we can't trade what was. We trade what is. We don't look at history and say, well, this is what it did before. That's what gets traders into a lot of trouble. We trade the right edge. This got bearish on the 25th of November, gang. This became something where we short the rip. We focus on overbought. We expect lower lows, or at least a lot of noisy chop. And that's exactly what we've had. Bearish, noisy chop, right? Again, if we're looking at a trend, GE's been in a pretty good trend. There's a number of healthcare stocks that are starting to organize. So please don't stay kind of tunnel vision to your favorite names, right? I try not to have any favorites. I have favorite restaurants. I have favorite sports teams, right? I have my favorite friends, but I don't have favorite stocks. Right? We don't want that. All right, so there was a question on Oracle. Let's do the same thing. Now, what I'm hoping everyone's seeing here in just 19 minutes that we're together so far is by looking at your indicators, this is the level of confidence that you should be able to have at just a glance. Oracle. Everyone here should be able to look at Oracle right there and say, oh, that's kind of red, a little bit of green, very noisy. Is it a trend? It's not. Now, these are daily time frame assessments. If I wanted to do this on a 1 hour chart, 2 hour chart, 30-minute chart, 5-minute chart, same thing, same indicators, same interpretation, different slice of psychology. I do not use multiple time frame confirmation. I use multiple time frame comparison. So if I want to be bullish in Oracle, great. It's a short-term swing trade. I don't need expiration dates that far out. I'm taking advantage of a shorter, smaller slice of psychology than, say, the daily. By the way, I would keep an eye if anyone out there is thinking, hey, I'd like to put shares of Oracle in my account. I want a piece of that stock. Keep an eye on the 150, 350 area in Oracle. If on a weekly time frame, that might be a great place to look for a way to enter via shares and put on a longer term position trade. Right? So that's what these tools can do. Now, I'm mentioning all this because this is all really fresh in my mind. If you head on over, most of you are probably there right now. If you're at the Simpler Trading YouTube channel, and I just want to make sure everyone's got this to check out, we did a deep dive on this. Oh, no, Simpler Trading YouTube. We did a deep dive on this yesterday night. How many of you were there for the webinar last night? Caught that live? All right. So if you have the Simpler Trading YouTube channel, or if you registered for the webinar, we sent you the replay. You can head on over to the live section, and there it is. All right. These are keys to consistency and clarity. Is it sexy, like telling you, hey, I made a whole bunch of money, or, doubled the account, which we did actually a couple of times last year. No, this is about not just today, not just 2025, but the rest of your career. How have I managed to be consistent through 3.5 decades, through all sorts of market environments? It's this process that we did for 20 minutes. All right. So check that out. Hopefully that was something y'all were able to All right, very cool. Able to take advantage of. I walk through expiration dates. I walk through my indicators. What are those keys? I walk through my stop losses and also account risk. So I went through a lot of detail in this video. All right. So hopefully that was helpful. And I'll see y'all tomorrow, same time, same station. Okay. All right, gang. Be good to each other.